Hi there, Serial Trader here. Since the last video, we've dropped down a little sooner than I had expected. If you remember in the last video, as of Friday, I was expecting that we had this initial A wave up, we'd done a B wave down, and we get one more C wave up before coming down to make new lows. But as you can see, over the weekend there into Monday, we gapped down to those new lows. So it changes the short-term wave count, certainly, and certainly spoiled the attempt at a long trade there as of Friday. But the overall message here is similar. So now we got an initial move down for AR1. We have this reaction up in BR2. And I'll add that this little ABC here, C failed to make a new high, as I've counted here. So that's kind of a truncated C wave. And now it looks like we potentially have a 1, 2, 3, 4, 5 down for either a C or 3. I'm leaning more towards the C, especially if it's already complete, because if it's a third wave, we're already starting to overlap into the territory of wave 1. So that would make it a more confident ABC down due to that rule violation. But that is if the bottom is in here and if this is a completed 5 waves down for C. I still have my skepticism about that. Some things I'll point out. We do have a lower low in price, but some bullish divergences here on the RSI. This is just the 1 hour chart, but I think if you go to the daily chart and the 4 hour chart, you'll see some bullish divergence there as well on the RSI. So there's that. So if this holds, then we're potentially starting a new impulse wave up to significantly higher levels. But I'll show you my skepticism there. So sometimes when there's a little uncertainty with the wave count, you go to the futures and see if there's anything there that kind of stands out to you that maybe conflicts with the cash chart there on SPX. So on the futures, I have basically the same AR1 down from the all-time high. I got a BR2 up. I'm looking at this as a wave 1, wave 2, wave 3, potentially forming a wave 4, as long as we start backing off here without going too much higher. And then another move down in wave 5 for either a C or 3. And if it just makes a marginal new low, I'll lean towards being a C. But if we really dump hard and get to some larger extensions of this initial move down and break out of this channel, that would kind of lean into it being more of a third wave. But we're not there yet. In fact, it looks contained within the channel so far. So basically you have a conflict between the futures and the SPX chart right now. With the futures, I can make a pretty compelling case that we're just bouncing up here in a fourth wave of, let's say, a C or 3. And then we need one more move down in wave 5 to complete. But on the cash chart, I can make a fairly compelling case. We got 5 waves down and we've made a bottom, and now we're starting to turn up. So because there is that conflict, my advice is to be careful. And you can see if I just go to let's go to a 30-minute chart here, or maybe an hourly chart here on the futures. So okay, say that that's supposed to be our bottom here. This sure doesn't look like a 5-wave sequence in progress just yet off the bottom. In fact, it looks quite corrective. You're contained within this parallel trend channel. I can easily label this just an A, B, C. Let's get the degree right here. And it already looks like, at least in the overnight session here, we're backing off fairly strongly from that marginal new high we made in that C wave. So this kind of suggests, oh, we need one more move down in this wave 5. So a big conflict between this chart and the SPX cash chart, right? I'm not personally playing this long. I'm just waiting for this to kind of clarify itself. But you certainly could try and play long against the lows. And on the futures, that's 26.95. And on the cash chart, SPX, the lows are 27.34. So even that, there's a conflict. You made a new overnight futures high, but you didn't make it in the cash session. So oftentimes those overnight moves don't mark the bottoms or the tops if the futures made a new extreme and cash didn't. Usually that gets corrected and the cash has to go and touch that level or beyond that during the regular session. But nothing's a sure thing here. So for me to really get on board with, okay, we have this corrective move completely finished and we're starting something more bullish to the upside again, to get in that camp, I really got to see this break out of this corrective channel and also this larger corrective channel. I got to see it break out of that, and then I'd be looking to buy a corrective pullback on that break. But that has not happened yet, and just got to wait and see here. Okay, I think that's all I wanted to go through on the wave chart here. Same thing goes for the SPX chart. You'd have to see it get above this corrective channel and then see a corrective move back down for a real higher confidence entry. Right now you're just kind of choosing which side you want to be on without a overly strong reason to do so. Okay, now on the fingers from candlestick chart, we certainly got a big reversal candlestick today. You can see we made a marginal new low at the lower shadow of this candle, literally by a fraction of a point. So basically a double bottom, kind of a hammer style reversal candle. And now we're back up to potentially test that gap that we made from Friday to Monday. But I'll say be careful again, because, okay, on Friday we had that nice reversal towards the end of the day, bullish hammer, and then look what happened into Sunday and Monday. We gapped down hard in a significant way. So what if that just happens again? We have a nice bullish hammer today, but tomorrow we fail and then just dump down again. That's certainly possible. So I just would hesitate to jump in too early here until I get a little more clarity. We're still below all major moving averages, still well below the T line. You know, if we go up and truly, get some bullish follow through on this reversal, close that gap, get back above the daily T line, then we're maybe onto something a little more significant to the upside. But right now, a little caution warranted. Also, you can even see the little bullish divergence here on the oscillator. Lower low in price, higher low on the oscillator. So there's definitely some bullish signals coming up, but a little bit of a mixed message there between the ES futures chart and the cash chart. One suggests one more stab down, the other suggests the bottom. So a little conflict there. We'll have to see how it gets resolved. We'll know probably, I'd imagine towards the end of the week, we'll have a lot more of an idea which one is the correct chart to go off of. Okay, that's SPX. Dow Jones Industrial Average, similar kind of thing. Marginal new low, strong rejection, close right at the high of the day, kind of bullish hammer. But again, we could just have another incident like we did on Friday, heading into Monday, and just dump down despite the buy signal. But I mean, you can't be too skeptical. If it really starts following through, and it looks like the bottom's in, it's time to go bullish again, right? You don't want to wait too long and be too skeptical, or else all of a sudden you're way up here and you're still just waiting and watching. So need a healthy balance between acting and getting enough, confirmation to do so. Okay, so that's the Dow. NASDAQ composite, they're all basically the same here. NASDAQ composite did a hammer reversal. Again, marginal new low. Exactly the same kind of day as the other indices. We're still below the 200-day simple moving average, which was acting as support for the NASDAQ. So maybe it'll now act as resistance if we're going to stab down again here, but we'll have to see. But, okay, now we'll go with the VIX. So on the VIX, VIX did make a lower high today and rejected strongly off that area, despite the indices making marginal lower lows. So that is a divergence between VIX and SPX. But VIX still hasn't broken its uptrend by any means. So it's basically just potential reversal, but not a strong one yet to try and say, oh yeah, for sure, VIX confirmed the bottom is in. And again, referring to Friday, so look at that huge VIX reversal on Friday. Certainly made it look like at least a tradable bottom was in, but then look what happened the very next session on Monday. So again, can't quite trust it here yet, although there are some bullish signs emerging. VIX, VVIX tool, there's definitely some things shaping up here too. So there's no real divergence between VIX and VVIX. They both made their high at the same time there yesterday, and they're now making lower highs. I guess you could kind of say that there's a little bit of a very short-term divergence here where VVIX is not making a lower low from this reference point, but VIX is making a lower low from that reference point. So that could suggest maybe we have to back off here again on SPX for that one more wave down, as the futures chart is suggesting. But you also can't ignore this. So the bigger divergence currently is okay. Lower highs on VIX, lower highs on VVIX, despite making a lower low on SPX. So that's kind of a bullish divergence between the volatility complex and SPX. And if we get below the red moving average here on VVIX, and subsequently get above the blue moving average here on SPX, that is a legitimate buy signal with this tool. So you certainly wouldn't want to ignore that either. But it's just not confirmed yet. So we have, just to summarize, we have some bullish signals emerging. I wouldn't say that they're confirmed yet. And we also still have a little bit of a bearish tilt as far as the futures chart and the wave count goes. Before I end the video, I will get back to that futures chart and also the cash chart here. So if we just go zoom out here, SPX daily, this is the Fibonacci retracements from the December 2018 low to the all-time high. You can see we got just into this, some people call it the golden zone, between the 618 and the 65% retracement. And that was 2713, the 65% retrace. So the golden zone is the area between those two retracements. And we got to 2734. So if we reverse off the golden zone here on the daily chart, then that's a pretty significant potential pivot. 4-hour chart. Also, I'll mention the relationship between either A and C. And let me just bring up the hourly so nothing's all clustered up here. Relationship between A and C. So equality would come in at 25.93. Now we've already done the 618 relationship between A and C, which would be at 27.98. But if we can't even get to the equality level, then this third wave potential is pretty much off the table, because the third wave should be, at least a 1.618 multiple of the first wave. If we just get between the 618 and equality, or even down to equality, and then go up strongly from there, which we might already be doing, according to the cash chart here, then this just looks like a corrective ABC, and we're heading a lot higher. But again, just as it currently stands, that's what I'm seeing. But a good dump down could certainly change the picture fairly quickly if it happens. And same idea on the futures chart. So on if we go to the daily futures chart, so we did get down to that same kind of pocket area between the 618 and the 65. Let's see, the 65 is 26.95, and we got to 26.95.25. So to a quarter of a point, reversed off that kind of golden zone threshold. So again, if we mark the bottom there, then that's a pretty powerful reversal and has pretty bullish implications going forward. But that is if we don't dump down in one more wave here. That will change that bullish picture. But that's probably all I wanted to go through today. Be careful out there. It's a very volatile market, and even when things look clear, like right now, under normal circumstances, I'd say, oh wow, we got all these bullish, points coming up. It's probably a really good idea to go long, stop below today's low, and that might work. But right now, I just want to see a little bit more before I can really embrace that. All right, serial trader signing off.